Hello guys, and welcome to today's video. We have a slightly different one here today because these are not normal circumstances. We are dealing with a whole load of news, and because of this, we have got Mikas from OnwardBTC here to help us understand exactly what to do and what's going on in the markets right now. Mikas, thank you for joining us.
Hey Ben, thank you for having me. It's a pleasure to be here.
Good. It's crazy times. I mean, I know that you're in the US. Obviously, you've just kind of woken up and haven't had too long to look at, the markets, etc. But, you've woken up to quite a mess.
Yeah, no, I mean, I obviously I was tracking the situation going into daily close and end of day yesterday. But obviously some really big developments have happened between then and now. And we are seeing that initial reaction in the market. We're seeing, we'll go into that a little bit, but just off the cuff, the dollar is pumping. Western indices are kind of taking a little bit of a dump, which is a little bit to be expected considering the fear, which is very understandable in the market. But I think today is going to be a very important day to see how Western markets really react.
Yeah, I agree. So let's just jump straight in. Let's have a look and see. Are there any markets in particular that you initially go to? So if someone is waking up, they're seeing a whole load of worrying news. What's the first step that you take?
Well, since I do live in the U.S., I live on the East Coast. My trading day kind of coincides with the trading day of the New York Stock Exchange. And we know from previous studies that there is a decent correlation between the S&P, equity markets, traditional markets, and Bitcoin. So the first thing that I do tend to check is the future, kind of S&P futures. I also check the dollar just to see how they are reacting essentially to what happened overnight. I always check the futures first because I usually check the markets in pre-open or before the stock exchange actually opens, and then that gives me a little bit of bias going into around that 7-9 o'clock margin where markets open and how that might affect the first couple hours of Bitcoin trading. However, I do trade mostly Bitcoin, so I do check traditionals first, and then I move on to the Bitcoin charts.
Okay, perfect. Well, let's start. Let's have a look
All right.
through some of those traditional markets.
Yes. Let me pull up my screen. All right. You guys can see my screen, correct? Okay. So, like I said, we're gonna first kind of jump into traditional markets, and then we'll take a look at the higher time frames on Bitcoin and kind of get an idea of what we should expect throughout today, going into the rest of the week, and potentially into the kind of next week. So yeah, the first thing I'm going to pull up is going to be the ES1 explanation point, or essentially S&P futures. This is kind of what's concerning me the most out of all market structures. Bitcoin, as we'll see, is held up relatively strong. There is still some support below us, which is hopeful. This is the, I think, leading point that's kind of concerning me a little bit in the world of more traditional markets, which obviously has a correlation and a spillover effect onto Bitcoin markets. What's concerning me here is the fact that we had this previous low sitting at around 4,300, which was retested as strong support. However, due to some fundamental news, obviously with what's happening in Eastern Europe, we have convincingly lost that low. Previously, I was kind of predicting or hoping for a double bottom kind of structure to build or be apparent in this $4,300 range. However, that is not a possibility anymore, as that is completely invalidated. So technically, market is still in free fall on the futures. Obviously, these are still futures. The actual kind of traditional market, or the markets, haven't opened on the East Coast yet, so we are not seeing this carryover effect yet to real markets or to the New York Stock Exchange driven market. So that's why I'm saying today is going to be a very important day to kind of see how essentially American markets or the U.S. market reacts to this pullback. Will there be a decent amount of buying pressure, kind of taking opportunity of this pullback, or is there still fear amongst the institutional market as well, as maybe they have some information that retail doesn't necessarily have access to, maybe news of possible further escalations or things like that, which is why, technical analysis here is, it can give us an idea of, possible areas of perceived support or resistance. But in the next couple of days, especially with, such world relevant news unfolding, fundamental events are going to override technical analysis. So
Absolutely.
we can obviously do our technical analysis and kind of, try and predict areas of support and resistance, but anything happening, in the real world is really going to trump our technical analysis. But, having said that, we can kind of dive into, quickly just trying to get an idea of where the market might free fall to. This run up that we've seen on the, in the traditional markets is, you don't really see too much of this in Bitcoin, because this is, we have a saying, I guess, in cryptocurrency land. I guess you hear it sometimes in the traditional market as well, saying that you take the stairs up to take the elevator down. And and what do we see here is we've been taking the stairs up since the Corona pullback. So whenever you see market structure like this, it is a little bit concerning. For us that trade a lot of cryptocurrencies, we're used to seeing a lot more volatility. If you overlay this chart with a Bitcoin chart, actually, you can see a lot of correlates with where market might have pulled back or not. However, it does make finding, highs and lows, or defining really strong highs and lows as support and resistance quite difficult. So maybe if we jump on the weekly, you can see it's even less volatile. It's very stagnant. And once we start getting big bearish engulfing candles to the downside like this, there aren't, it's not easy to spot certain cutoff highs or lows to kind of match support or resistance to it. So I'm a trader who I'm a swing trader. I primarily focus on Fibonacci theory along with volume analysis. So we're just going to start by throwing in some fibs on the traditional charts, just to kind of see, where we're at and what the closest kind of support areas will be. So I'm going to use the weekly first to throw in this kind of higher time frame macro fib. And we're not going to get too much information from the daily. Obviously, I'm kind of cognizant of that 0.236 retracement. Kind of see where that lines up right around the 4,000 area. 4,000 is a big round number. That's also a big kind of psychological area. And we do have some high confluence here, along with some low confluences here. So I think that's going to be kind of the first major area that I think that the market could realistically free fall to, especially on such big bearish momentum. I don't think this is too much of a stretch. That's only about 120. So I think that's relatively likely, and this is from, a more so bullish perspective. We really will need this kind of 4,000 area to hold. If it does not, we lack even more structure in between the 0.236 and the 0.382. There isn't too much here. We have one anchor low at around 3.7 and that's also about right around 3.7. So, if we do lose that $4,000 region, it does open a significant margin, further to the downside by about 6.5% by traditional market standards, and that is only kind of exponentiated when we're dealing with Bitcoin.
That's even 6% in a traditional market is crazy.
Yeah.
Oil is up by 6.5%, let's say, on the day.
Yeah.
And that's a big jump. But yeah, the S&P 500, you shouldn't be seeing drops like that.
Exactly. So, I think we are getting a lot of that bearish momentum going into daily open today. So it's going to be interesting, actually, and it'll be very important to see how the New York Stock Exchange essentially reacts. We're not getting too much of a reaction in pre-market or, on futures just yet. So that's why I think it is possible that we fall a little bit lower into that 4,000 kind of support area. However, it will be important to kind of see a strong bullish reaction, I would say, at least going into market close, to kind of, for me to really maintain medium-term bullish bias on Bitcoin, and I guess we'll see why. We can hop into the Bitcoin charts soon here, but yeah, I wanted to bring our attention to traditional markets. It's going to be a very important day to keep track of that, especially going into the open of the New York Stock Exchange, just to see exactly what are institutions doing, kind of moving into this new trading day, the first day after a potentially international conflict has broken out.
Yeah, and there's also, Mikas, to add on to that, I think it very much feeds into the mindset of the institutional traders. Like,
Yeah.
I think maybe part of the reason why there hasn't been as much movement, I mean, there has been a lot of movement, but we're only talking a couple percent, which
Right.
is actually not that much relative to when you consider, like you said, exactly what's going on. And it might just be a case of the traders don't quite know what they should or shouldn't be doing. And even though you might be an institutional trader, it doesn't mean you have all the answers, because, right now the US don't really have, I would say in the media anyway, they're not covered as having troops actively engaging, with Russia. So the US markets could still be a relatively safe haven, given that, just the same as what happened in World War I and II, the US were not as affected as the rest of Europe. And so it could still be that, the US, if they do get actively involved, the stock market will continue to plunge. And that's going to bring that risk on, risk off mentality even further, which obviously when you're in a risk off market, things like Bitcoin don't do so well.
Exactly. I completely agree. And that's why I'm really emphasizing that market open is going to be interesting to see today, to see if Western markets still have the kind of bullish posturing that we've seen in the run up essentially since the COVID crash. And exactly what you were saying, risk on versus risk off. I definitely think today, or the past 12 hours, have been and understandably a situation where Eastern markets have been risking off. And now it'll be interesting to see if Western markets really are following suit, if they are on the same page as Eastern markets, to see if there's a further kind of that risk off sentiment rolling through the Western markets or not. So yeah, that I think today's going to be a very
Bitcoin, and see where currently, or even just the general kind of market or crypto market, everything's down by quite a lot. How is it that a trader should manage a situation like this? I mean, you've probably been through this a couple of times, but if this is someone's first, let's say we'll call it a major dip, how would you begin to trade this? Are you cash? Are you fully invested now, or is it a long term? How would you put together a strategy for somebody, or what would you be doing?
That's a great question, and that's something that I really strive to try and kind of teach and put out there. I think a lot of it also comes down to a trader's mentality coming into this space. Are you more positioned as an investor, or are you more positioned as not necessarily a day trader, but a trader? I always kind of draw a distinction between an investor and a trader. Obviously, to be a trader, you also have to be an investor, but trading takes investing to a whole new level. So my number one tip to new traders is not being afraid of really switching between hard assets and cash, essentially. So personally, right now I am sitting in cash, and we can actually hop onto the Bitcoin chart, because this kind of coincides with the way that I trade. I'm going to pull up the Bitstamp chart, just because it has more history, and I'm going to pull up some EMAs. So like I said, I am mostly a Fibonacci theory trader. That is a whole school of thought within itself. You have retracements, extensions. You can also have Fibonacci kind of moving averages, and things like that, and more indicators built on moving average theory and stuff like that. But essentially what I do is I'm a swing trader, so I hold my positions on average. Intraday positions I can hold up to a week, but my investments I usually hold months, sometimes years. But for me personally, I follow the 200-day exponential moving average and simple moving average. And what kind of makes a decision for me to swap essentially from, let's say, holding coins to, let's say, USDT or stable coins is going to be whenever we essentially like switch trends. There's a lot of different ways to kind of quantify trends and to visualize trends. Personally, I use moving averages. I use the 200 exponential and the 200 simple. And whenever we essentially break below the 200 exponential and the 200 simple, I look to cash out on a relief rally. Obviously, this is a personalized strategy. Just like I dollar cost average my way in, I dollar cost average my way out. So I'll essentially sell on relief rallies. And I did sell out a little bit over here. I managed to kind of buy in on this run up again a little bit, but most recently, once we broke below the 200 exponential and we were kind of sandwiched in between here, I moved 80% into cash. I'm not necessarily holding too much Bitcoin just yet, because personally I am also in a little bit of a risk off mentality here, just because I had sort of the privilege of being in the market from pre bull run, so I do have the privilege to be able to cash out a little bit here and realize some gains. So my tip to newbie traders is really don't be afraid, or don't think that necessarily switching from Bitcoin to cash is a bad move. Trader, maybe if you talk to an investor, all these Bitcoin kind of maxis will say, you have to just accumulate Bitcoin. And in a sense, they're right. But at the end of the day, if you are more so a trader rather than an investor, then you're looking to realize those gains. And you have to be fluid when you're switching between, holding a volatile asset and something a little bit more stable. So I would say don't be too afraid of switching from one to the other. But don't do that necessarily on the lower time frames. Have a focus on the higher time frames. Use the daily, use the weekly. I know it's not that exciting and it's not that active because you might not have trades, every day. You likely won't. However, it is important to keep those higher time frames in mind and use them to define the essentially the distribution of your overall portfolio. So I say the same thing for altcoins. So I mostly trade majors, so I'm mostly trading and holding Bitcoin, a little bit of Ethereum. I'm in altcoins a little bit, but if you're more so a altcoin trader, I would say keeping an eye on the higher time frames is even more important, especially because I think with this pullback, and if you are an altcoin trader, then I'll say you have to do your homework. You have to understand Bitcoin dominance as well. Altcoins are going to get really hurt here over the next couple of days because we are rallying on dominance while dumping on Bitcoin. So, I always really, promote having situational awareness. And what I mean by situational awareness is start with the higher time frames. Be aware of what overall bias is. And then always think about how that will affect your portfolio as a whole. What is your portfolio? Are you holding the coin itself? Are you holding stable coin? Or are you holding altcoins?
One thing I want to add into there, Mikas, is quite often, if you speak to any, maybe not any institutional trader, I will say, the vast majority, they're not sitting there on the 5-minute time frames, the half hour, the 1 hour. They are working on the mega trends, so looking at where is it going to go, and because obviously the smaller time frame, the easier it is for you to get false signals, alerts, or false indications from what's actually happening in the market. And you might see a fantastic pattern, but if in the larger time frame, if it's not going to stick around, it's okay to scalp, get in and out. But the most of the major investors are all on at least the daily. And I think that's something that, because we understand, like you said, with situational awareness, we need to understand exactly who it is who's running the markets and who's really moving them. And at the end of the day, Mikas, you might have $10,000, and that's great, but it's not going to move the market when you've got, someone like BlackRock managing $9 trillion.
Exactly.
And I think that's where, we have to have that like appreciation for what's really going on.
Exactly. And I think, a big part of that, and, a big part of kind of learning really to trade is, as we've talked about in the past, is, managing your emotions really. And especially when you have, your own hard-earned, like earned cash on the line, it can be a little bit difficult. But, my tip to new traders always is, never, exactly like what you were saying, never try and move the market. Never try and put your own, don't think that you're necessarily right. Don't think that the position that you're holding is necessarily correct. Obviously, it's important to have, you know, also to control emotions and trust a trade plan if you have one. But you never want to have hopeful or wishful thinking when you're really trading. Just because when you are wishfully thinking when you're holding a position, you're not necessarily reacting to the technicalities, but more so you're just hoping that if your position at a loss is not going to become a bigger loss. Once you start going into this kind of damage control mentality, it really is usually an indicator actually of that you are a little bit too emotional, and that it usually punishes you even more.
Yeah, I think one thing is, especially even when people are feeling emotional, they've had a few losses, you don't stick to I've done it myself. You don't stick to the game plan of, this is what I need to do before I do my trade. This is what I need to do during my trade. And this is what I need to do, in order to exit. And that is a plan that you have very well established at the beginning. But then if you suffer some losses, you think, oh, well, I don't have time for this because I need to get in now. And just by cutting out parts of the process, that's where I think a lot of people see, or get really hurt. And just like now, I mean, you could look at this, the Bitcoin chart that you've got up. It looks like it could be a double bottom just on the right-hand side there. Is that a rebound? Is that, if you're very desperate, you might see that and think, well, that's absolutely a level of support. Let me buy a big position now. And yes, it might make sense at the time, but you're completely forgetting the fact that there are so many fundamental factors. Just, like you said, you get too caught up and too emotional. These other factors really can destroy your positions. So I absolutely agree with you there that you have to really focus on sticking to your trading plan. And if you have a system, don't deviate from it.
Exactly. And I think the last point to that is, exactly, once you have a system, obviously, do your due diligence, do the back testing, nail it down, really, be very objective with your entry, exit, risk management and stuff like that. But always, so personally, I take, most of my positions I take, with bias on the 12-hour or the daily, and I usually find entries on the 2-hour or the 4-hour. However, a critical, piece that I added to my trading strategy in the last year has been, everyone talks about using multiple time frames for putting together a trade. And, objectively, that makes sense because you are able to encompass essentially more, historic data in making a decision. But that can be very difficult for newer traders who are really just trying to learn a system on one time frame, let alone applying that to multiple time frames. So I don't think that's necessarily the correct step for a newer trader. But what I will say is, don't be afraid to, before you're taking a trade, jump up, a time frame or two. Just take a look at what your system is looking like on a higher time frame and see if that bias coincides with the position that you're trying to take. Obviously, if you're scalping, this is a little bit of a different ball game altogether because you have to be much more fluid with the ins and outs. But with taking more so swing positions, you're always going to have a higher probability of taking a profitable position if jumping to a higher time frame, momentum is on the same side. So what I do is I always wait for example, if I wanted to take, let's say your call that we just said, that let's say there's a possible double bottom forming here. If I wanted to try and trade that double bottom, I would not take that trade today, probably. I would wait until there's some kind of indecisive close, and this goes into, you can candlestick analysis, candlestick theory. If you had some kind of, bullish hammer close or doji close, only works on the higher time frames. I don't recommend you use candlestick analysis on the lower time frames. But with higher time frame trading, it can provide you a little bit of useful information. But once you start seeing that indecision in the markets on the higher time frames, and let's say you're getting a bullish signal on the lower time frames, then you get that alignment across multiple time frames that only increases the probability of the trade kind of going your way. However, if you're trying to enter, let's say, a swing long here while we're forming a bearish engulfing candle on the higher time frames, probably not the best idea in terms of probabilities. And that's what I kind of emphasize to all the traders that I mentor is, trading once again isn't about wishful thinking. It's not about it's not gambling. Obviously, a lot of people gamble and they just put money on bets essentially on what they think is right or wrong. But if you approach trading as a science, once again, building a system, having entry and exit strategies, all these critical components, it does become easier in a sense, because you are relying less on your own emotions and you're relying more on this like system that you've put together. So exactly, I think it's really important to take it slow in trading, especially in the beginning. Obviously, paper trade, only start putting your own money on the line once you feel comfortable with a system, essentially.
Yeah, no, I absolutely agree with you. Absolutely. And for everybody else who wants to find out more about OnwardBTC and the way in which they do trade, obviously head over to the app. What we will do is they will be providing more and more content around how it is that you can best take advantage of the Bitcoin market as well as other cryptocurrencies themselves. Now, Mikas, do you have any final tips for the viewers just before you sign off and obviously crack on with the rest of the trading day?
So I mean, I would say I can do a quick kind of, and like I'll update the I'll give my opinion essentially on the Bitcoin market here. Just really quick, I can kind of plot some major levels of support and resistance just so we kind of have an idea of what to look out for, because I think there is a major kind of bullish level coming up, which is obviously our short-term floor right around 30K. So I think this double bottom that you pointed out earlier is also a very real scenario, because this is something that I've actually been monitoring over the last couple of days, and this is something that I was looking for. We did take a short off of these highs here, and I was kind of expecting a bullish reaction from this double bottom zone, but with the bearish kind of momentum that we're seeing in traditional markets, I think it is likely that we deviate a little bit further below that. The only thing that's kind of holding us is going to be a macro fib that I'm going to put on. I'm going to be using the Bitstamp chart just because I wanted to kind of point out these moving averages here. But what's been holding us up most recently is this 0.236 Fibonacci retracement, and that's still kind of the closest level of support. We can see that it acted as very strong, or it caused a very strong kind of supply absorption over here on our most recent pullback. We're off the first low of that double bottom. So obviously that's the first kind of level that needs to be invalidated. However, that support zone really that acted as our basing low here and was retested as support here is in that 30K region. So this is why I think watching traditional markets is going to be very important. I think we might get some more bearish momentum coming into New York Stock Exchange open, which might cause us to come down and really test that 0.236. But following that, it's going to be important to see if we can get a bullish reaction or not, because if we cannot and we start going into this kind of 30K area, obviously it's not the end of the day until we start closing below it. So if we do get a higher time frame close on the 12-hour or the daily really below 30K, I would say that is going, or 29.8K, that is going to be concerning for kind of a on the macro picture. This could be a macro double top. If we do start closing below 29.8K, bearish market vibes kind of start setting in, at least for the medium time frame, maybe to the 0.382, or there's some support levels in between here. But that 30K area is really important for the bulls to defend. So it'll be interesting to see how the Bitcoin market really reacts, and how strong what relative strength it's able to show versus a lot of this fundamental events that are happening in the world. Because Yeah, if we do start closing below 29.8K, things structurally aren't looking
There's
too
not much
great.
in the way there is there to
Yeah,
stop a massive drop to probably 22, maybe,
yeah.
yeah, maybe 20K.
Yeah, I mean, exactly. From a Fibonacci level, 22K is looking juicy, but structurally, we don't have too much there. From a textbook perspective, retesting these highs, right around 20K would be great. Which is why I kind of wanted to pull up these moving averages as well. We can see that the 200 simple is sitting right around 20K or previous highs. So this is going to be in my perception, an extreme demand zone. And in Bitcoin, we don't tend to get everything that we ask for. Like, there is a huge kind of interest in it now. So, the 200 exponential, I think, is a slightly, more realistic level that could be tested if we lose 29.8K, which is sitting right around 26K, which isn't too far. But yeah, kind of forming a macro low in between the 200 exponential, the 200 simple with that 0.382. I think this is going to be an area of strong support if fundamentals kind of do indicate a bearish breakthrough of our like kind of local high support here.
Yeah. Well,
Yeah.
I think a lot of people, if we're getting towards that 25K, I know, even myself, I'd take out a mortgage,
Yeah.
just to buy some Bitcoin.
No, that's fair. And me too. I know a lot of also institutional players who are, I mean, they're already in the market. Institutions play the game a little bit differently because they're playing the 5 to 10 year market. So there, I mean, we saw BlackRock, we saw, MicroStrategy. They've been buying throughout this kind of consolidation area regardless. So the lower we go, I think the more, kind of inflow that we'll really get of fiat. But I think watching also the regulatory markets is going to be very interesting because we're starting to see, legislation coming out in the EU around kind of regulating stable coins and in the US as well. Obviously, this whole situation with Ukraine has really kind of, diverted a lot of attention. So yeah, it'll be interesting to see. But I agree. As soon as we break 30K, anything below 30K, I think is although market might be in free fall, there is going to be significant interest. And structurally, if we retest any previous structure, like if we retest this, I wish, I have bids set at 20K already, just to be in the order book. So yeah, it'd be great. But
Yeah. Well, look, thank you very much, Mikas. Really appreciate it. It's always good to reconnect, and hopefully we can have you back again very soon to see what happens as a result of everything that's going on in the markets right now.
yeah, perfect. Thank you, Ben. Thank you for having me. And sorry that I did have some more elaborate TA. I think, like I said in the beginning, during these times, fundamental events and fundamental analysis is really going to be driving the market. So anything that we do technically is it's obviously a good idea to kind of have an idea of where supports and resistances might be. But for the next couple of days, I definitely think that market will be driven by fundamentals, and it's our job as retail traders. Once again, we aren't necessarily the ones moving the market. But it's going to be important to see how those who do move the market react to fundamental news and to try and be on the same side as the market makers. So with that, I think going into, New York Stock Exchange open today, I've closed all my positions. I'm sitting in cash. I'm looking for market reactions. And then based on this relative strength of market reactions, either bearish or bullish, that will inform my trading for the rest of this week and kind of moving into next week. So, and that's what I recommend most people do is, don't FOMO one direction or the other, wait for a reaction, wait for that bias to really be, distinct, and then, follow the wave essentially. Don't get caught up.
Good. Thank you very much for the input here.
Awesome.
All right, well, Mikas, thank you very much. Just so everybody knows, we will have more content being posted onto the app And obviously, if you came via the app to watch this, make sure you head back over, give OnwardBTC a like, and we will see you in the next one.
Thank you. See you.
Thank you.